Good morning, everybody. Today is the 19th, and it is Tuesday. We're all waiting for Jackson Hole Powell, because there's nothing to do here besides watching the market going back and forth, with nothing really to do here, unless we see a movement in the big guys such as NVIDIA and Apple. But anyways, we'll talk all about it, see if we can find any numbers that could at least trigger some trades for us today. But before we do that, a check on the audio and the video. I'm looking at the SPY, the 5 minutes chart. If you can hear me fine, see the picture fine, a little bit of a feedback, and we'll begin right away. Okay, thank you, Sean. The next step, Stone. Everybody, thank you so much for the feedback. Let's begin right here, the SPY. Anything interesting? I mean, I'll give you the setup for today and for the end of the week from the options market. And again, these things change from day to day, but it's important to keep these numbers in mind. So right now, looking at the overall pattern, the hourly chart, we have consolidation, bearish momentum, while the chart is consolidating, not pulling back. And again, 9 times out of 10, let's say 8 times out of 10 to be conservative, that is resolved with a move higher after that. We could have the exception. The exception could be if J. Powell comes out hawkish, then we'll see an algorithmic piece of selling. And then you're going to probably see the longer time frames producing further negative momentum. So that's a possibility. But right now, I would say that if there's no upset from Jackson Hole, then what is the reason for the market to go down at this point? If we look at the SPY today, we're looking at the expiration date of the 19th, which is today. Right off the gate, we want to look at the OI change. We see big numbers right here, beginning from 643 all the way to 646. If we look at the puts, yeah, big numbers, but not as big as the calls. So the risk for the market maker, the immediate risk right away, is from 643 all the way to 646, depending on the volume. So I think if you look at this number right here, 646, then look at the SPY, the high of the day today was 644. So not all really accounted for because they need to buy shares under 646 and 45 to hedge against that. So they're waiting to see if there's volume, though. If the volume begins to show up here, yeah, they'll push it all the way to 46, no problem. But we're seeing also put volume showing up at 642, which is more dominant than the call volume. So they have to accommodate that first, 642. Let's see if they've done that. So we went all the way down, 642. So right now, the market maker accommodated everything. The risk to the downside, which was 642. And the risk to the upside, which was 43, 44, based on the volume, could be expanded to 45, 46, depending on if the volume shows up or not, because we have big numbers right here. So I would say still the odds without increasing the volume of the puts beyond 642, I think that we could go all the way to 645, 646. That's a possibility. Of course, the market maker, if they want to exercise maximum pain, you'll close a touch below 643. That's going to eliminate all of this big open interest right here. And if you close at 643 or 642 in the puts, you got not a lot of risk here. You got a few thousand contracts. That's easy to hedge against. So that's the max pain, is just to close right where we are right now. Nothing special, really. So let's do the gamma study. I'm going to do it for today. We're going to do it for the end of the week. If we look at the expiration date of the 19th, you got your call wall at 645. You got your put wall at 640. The gamma flip would be 642.78. So beyond that number, you can theoretically see more selling all the way to 640. That's a possibility today if you continue to maintain a trade below this number right here. Otherwise, you still got a gamma exposure at 44 and 45, which is quite big. So again, you see it here more maybe clear than the chart above. You see that gamma exposure, so that's where the market maker has to cover for. So if we continue to see more volume, just going to go ahead and cover for the 644 and 45. When it comes to the open interest, that's of course become relevant once you have a flip beyond the gamma and beyond the put wall. Then it becomes more relevant to look at the open interest and see, okay, that's the risk right here because that's the bigger contract. Same thing when it comes to breaking the call wall, 645. Then we have to look here and say, okay, what is the next number, 650? Okay, that could be a possibility for today's session. But this is usually they're going to keep it beyond or within these walls that you see right here. So again, it doesn't look like an interesting session, to be honest with you. But what about the end of the week? Let's see the setup here. And if we look at put wall, call wall, 45, 40, same numbers. Here we have a lot of gamma exposure. There, see these blue bars, rather? That's showing gamma risk. So if we stay beyond the gamma flip, we could theoretically go down. This week, if we break the put wall, we could go ahead and accommodate this gamma exposure by the end of the week. You can see it here that we have a big gamma exposure at 640. If you continue to trade beyond the wall, the flip right here, because there's call wall, put wall, and there's the gamma wall, which they call it the gamma flip. Anyways, if you trade below that, you're probably going to have to accommodate that 640 because it is a point of risk. You break that gamma 640 gamma wall, then we got to talk about the open interest and talk about this 635. So that's the setup right now. Let's call it 642.5 to be conservative. If we close below today, then there is a big chance that we could go to 640 before the end of the week. That's the setup. The other name that's important is NVIDIA. NVIDIA is flushing down a little bit here. Down about 2%. So what's up with that? Why is NVIDIA going down? Let's check on the numbers. Looking at NVIDIA, we want to look at the volume before we do anything. When we do that, we see closing here at the 180. That's an important contract. So they're closing that contract. They're adding a little bit in 182.5, 187.5. Some volume showing up here, but competitive volume showing up in the puts too. Bottom line is they're closing a big number of contracts at 180. They're closing a big number of contracts, 175. And they're opening some contracts in the puts. So the market maker sees a little bit of risk to the downside that they have to hedge against. Now, if we look at the gamma exposure, because we have earnings from NVIDIA coming out, I believe, next week. So if we look at the expiration date of this week, nowhere near the gamma flip. So that's don't expect that NVIDIA is going to sell in a crazy way. But you have to look at these walls seriously. So you have your put wall. That's going to be your support, 180. We're already breaking that support. So we're beyond the put wall, which brings the conversation, okay, if we're not going to recover the put wall, then the next thing that we have to look for is the gamma exposure. You have a lot here of gamma exposure at 177.5. You have Plenty of gamma exposure of 175, but the highest was 180, so the gamma exposure has been satisfied either way. Now we have to look at the open interest. And if the market maker continues to see NVIDIA trading below 180, then this put interest here becomes interesting for the market maker, 175. You have a big number of puts on open interest, then they have to push it at or below that number. So watch the number 180. It looks like we lost it, so you see this support right here around 180, then we went down, we made a lower high, broke below. So that's the mini gamma squeeze to the downside happening right now, and it might lead to 175. But again, keep your expectations really low about a pullback in NVIDIA, because the point of a gamma flip is way down at the 150s. So like I said, before the report comes out, we're probably going to see a pullback, 175, maybe 165 the most, if things get really bad. And then it's going to be depending on the earnings report that comes out the 27th. Not this week, but next week. So that's Apple for you, or that's NVIDIA rather. What about Apple? Apple is flattish, not doing anything at all. Up about a quarter of a percentage point. So it kind of balances out a little bit of the pain that's happening from NVIDIA, but nothing much really. VXX, the VIX today, catching a little bit of steam here, but I don't expect that we're going to reverse a trend here to the downside. I think we're going to do it today. Without Jackson Hole, of course, you can't do that. So a little bit of hedging, maybe before Jackson Hole. Some investors are hedging a little bit, but I don't expect it to be significant. And then we have Tesla. Look at Tesla. Also, probably going to see some hedging here in Tesla, so it's flushing down a little bit. Right now, I think the appropriate trade is having the butterfly puts. If we see, let's say, because we have the possibility here, if we clean this up, so you can see it better. Possibility of inverse in a shoulder, even with this flush down candle. That's a possibility. So we need to break, let's say, the lows here at 328 before we place something big, such as a naked put or a debit spread. So right now, we'll just keep it at the butterflies. I think that's the appropriate trade to keep for now. So that's the SPY here, flushing down a little bit. Let's see if we broke in the put wall, 640. If we break it, then we can talk about something more significant. But I think it's NVIDIA really that broke the put wall, and that's why it is flushing and flushing the SPY down with it. Let's do the movers really quickly here, see what we have up and down. We have USAR. So the question about USAR, hold or not, I would say keep. If you have 14 puts, for example, keep those. If we dip below 14 by the end of the week, I'll probably exit, because right now we're maintaining a pattern of sort of higher highs, higher lows. If you begin to break that, going down here below 14, yeah, it's going to begin to be problematic. And maybe that's because the dollar is expected to go higher because of Jackson Hole, or because maybe some data coming out. That's still a possibility that the dollar will have a rebound. And if the dollar catches a rebound, all metals will suffer, including USAR. So you see here higher lows, and the assumption if Jackson Hole is negative, aka hawkish, you'll see another move higher in the dollar. All metals will go down at that point. We go back to the movers. We have Tilray, nothing really significant. Palantir down 7%. That's interesting. So it broke even the support that I got, the 170. We have now the gap. What's up with Palantir? Why is it doing this? Why are they selling Palantir? Let's check out the options market. If we do PLTR, options pricing, and we look at what are they buying, what are they selling, they're buying some volume, called volume here, but they're buying a lot of put volume. So all of a sudden, the traders are flipping to negative. They're buying a lot of put volume. You have it all the way to 160 in today's volume for the expiration date of Friday. And then if we look at the gamma exposure, we're looking for the 22nd. And if we do that, we have a put wall, we have a call wall. And right now, we've broken the put wall, we've broken the gamma flip. And that's why we continue to go down. So where can we stop? Got a gamma exposure for you here at 160. You just saw the volume for the 160 puts. So 160 is probably a decent shot. And you see the open interest here. put open interest to 160. So I think Palantir might go to 160 and then find some support, oversold support. As you can see here, the 5 minutes beginning to show up. In the hourlies, it's beginning to show up. And 160 is going to be in or around closing the gap right here. So if you've been, I know some of you have puts in Palantir that you bought last week or the week before. I would say if you have them with shorter expiration dates, it's probably a good point to book profits around 160. Then wait and see if you can get another opportunity after that. See sharp pullbacks, by the way, in a lot of these high beta, smaller names that have been really, really hot. And what can we read here? Because there is a theme today. Tilray, USAR. You have names like Magnet, AppLovin, QuantumScape, MP, KTOS, Reddit, right? So all of these hot names, AMD. What's going on here? What's going on is de-risking. What's going on is a little bit of fear, not just about seasonality, but about, is the Fed really going to go with the 2 interest rate cuts? I don't think so. I think Powell is going to try to throw some cold water against that. And if we see interest rates pulling back, the expectations, that is, for interest rate cuts and yields recovering, then a lot of these speculative plays make sense to book profits from right now. And you see that happening even in AMD. A little oversold in the hourly, but I expect that 165 are probably going to be a decent target to reach. And we have butterflies right now is the way to do these kind of trades. Symbiotic is really interesting because it has sort of a topping and a shoulder. It might go down to 40, so maybe you want to think about a trade here for Symbiotic. Let's see if we can find some options on it. SYM. And if we do 40, it's a little bit too far. Symbiotic right now trading at 49, so if I'm going to go 40, probably going to go in Jan or November, something like that, but that's going to cost me too much. So 45 September, and then let's say if we sell the 40, can't get a lot of volume here, so I might just keep it naked at the 45 September 19th. Not the best chance of profitability, but if you think that this chart is going to pull back, it could do that really fast because it is also a high runner that could see a lot of profit taking. You see it in Circle, you see it in the IPOs, the hotter names all pulling back. MDT was earnings, so I still have MDT in the portfolio, and it's catching a rebound. I don't think the report was bad, by the way. It was actually a beat on both the top and the bottom line, so I think Medtronic may be giving you a better price for an entry here. But the hot stuff, the Vestras of the world, no, these are pulling back right now to de-risk. What's moving higher, though? Intel, of course, we talked about this before. Now we got to extend these gains all the way to about 35% since we got the, hey, CEO is going to get out. And again, they want to find the buyer for the company. Yeah, it might push all the way, squeeze a lot of shorts in Intel and push it all the way, maybe the 30s, 31, 32. That's a possibility. Got Neo with the positive pattern here of maybe you can argue cup and handle, a little bit of a higher cup and handle, but breaking out of these ranges right here. I'm still not sold on Neo. It's going to take me a little while to get back in that game. Home Depot with an earnings report. Does that eliminate the topping in the shoulder? Not really. We still have a rising topping in the shoulder, but right now with interest rates at least and longer into the yield curve going down, there's a lot of demand for housing stocks. Probably Jackson Hole is going to kill all of that. I mean, you see a Lennar here just moving significantly higher. And it's something, to be honest with you, it's something that the managers pass among each other. Hey, I'm buying Lennar, I'm buying home builders because of this and that, and we see them here increasing the volume of buying all of a sudden just because somebody passed the note. But Jackson Hole could put an end to that. Anything else that is interesting here, folks? It's interesting to see Caterpillar, for example, getting down after earnings and then coming back up. This is a zone, if you read my morning brief, where we could see price gouging, and they can get away with it. If the government is spending money on a new construction and Caterpillar is going to jack up the price because of, hey, we just can't do that, we can get away with it, they'll get away with it. See Conagra going up a little bit. McCormick. McCormick is kind of tricky because it's not been performing pretty good, but I have high hopes for it. So you see some defensive theme showing up here among the winners. Yeah, you have Intel, but you have a little bit of defense showing up. The price gouging, housing stocks, we talked about that. But a little bit of defensive in waste management, right? That's a defensive. Conagra, McCormick, Kroger, the Chinese theme, we talked about NEO. HT has an earnings report today. VLO is a little bit defensive. Thermo Fisher is defensive. General Motors. If you read the morning brief today, I think that the market is just assuming they're going to get away with a lot of price gouging. So if we look at Toyota, position I added just a little bit today in the morning. And the idea here, we have an inverse in his shoulder, and we could continue to see Toyota beginning to recover a little bit. This name also pays, I believe, a dividend here. Yeah, about 3%. So it makes sense to me. I don't think Toyota is going to face a lot of trouble. Most of the production happens in the U.S. anyways for the most important cars. And for the cars that come from Japan, they can jack up the price. And I think they get away with it. At least if they do it gradually, they get away with it. Anyhow, this is the outlook that I see for the day, folks. Let's go back to the SPY and then take your questions and your comments. You're getting closer to 640, but we need to break 640 before the action really begins. Okay, thank you for being patient, folks. Let's begin here with thoughts on Stone. Thoughts on VKTX overreaction, abandon the trade. Well, I got calls on Vikings. Those pretty much betting farewell to these calls. Not going to happen because I got my calls at 45, 40, and 50. So that's not going to happen. The idea is the trial that everybody was anticipating here came out, and the results are on par. See, the weight loss. Let's go back to the headline here. The weight loss from the pill was 12.2% in the stage trial. So it is a good. It is a good trial on par with NVO and Eli Lilly. But the market was expecting something more, was expecting this one to be the breakthrough. It just didn't work out that way. We have side effects. All of them honestly have side effects. It's the way the weight loss drugs work. So I'm not really, I think the concerns about side effects is just bullshit. And they need to get over it. You know, if you want to lose weight that way, the easy way, of course there are going to be side effects. But the significance of this is the 12.2%. That number came out disappointing to what the market was expecting right here. Do we buy it here? Do we see an opportunity in buying it? Maybe in 3 days. We'll get back into it in 3 days. I'll look at it here, see if it finds some stability. Because the results were not bad. They were just on par with Eli Lilly and NVO. And they could expand on it and become a competitor in that zone. So there is a chance that the company will become profitable in weight loss drugs. But right now, this is a really negative reaction. Got to give it 3 days rule. Can't buy it right away. Like I said, I had a significant amount of calls, by the way. And those are out of the money now. I'm not expecting that they're going to work out at all. Okay, still hold USAR. Yes. But if you're worried about it, if you think that the dollar might go higher because of Jackson Hole and add some pressure on these kind of trades, just buy the 14, right? Go with the USAR. It's not going to cost too much. And we do have volume, so if you go to the 14, you'll pay about 60 cents. If you go a little longer, it's going to cost you a little bit more. You can finance it by opening a spread on it. So if you think that a good price to get back into USAR is 12 or 11, what you can do is actually open a spread. You sell the 12, for example. Let's say go to next week or September, whatever you'd like. Let's go next week, for example. You're buying the 14 puts. That's your protection strategy. Cost you about 95 cents or so. And then you raise some cash. There's no bid on it right now, but as the volume shows up, you're probably going to find the bid and the ask getting closer. The idea is, hey, if USAR goes below 14, I exit. If it goes below 12, I think that's a pretty good price. And I'll buy it at that point because we're probably going to rebound. That's the idea behind it, but I'm keeping it for now. I'm not going to exit except if I get forced to exit and my puts are exercised. Peter, what is your thoughts on TMO? Was one of the unusual trades you highlighted. Have the 500 calls buy for September, funded by selling the 460 puts. I like the trade. I like the structure right here because you're financing 460, which you have plenty of room, to be honest with you, before it becomes a problem for you. I mean, you have supported the 200 moving average, so 28 moving average, so you're pretty good here, and you're close to 500, so I would say you have the cup and handle playing out in your favor. I would stick with Thermo Fisher, to be honest with you here. Maybe the problem is it got a little bit too hot in the short run, so if you look at the hourly chart, you're probably going to see some oversold readings. But I would say you have it all the way to September. Stick with it. If you lose the 200, okay, then we could talk about maybe you should think about the trade again. Opening spreads, reduce your risk, exit, that kind of stuff. But right now, so long as you're above the 200, I would say stick with it. You're probably going to see more buyers pushing it all the way 510. I have the number at 512.77. I think if you go with that number, your trade is going to be pretty profitable. At that point, you have a better decision-making point of view because you'll be setting at profits. So stick with it for now. Leonardo, hey Mav, I hold PLTR shares. You bought at 177 and also have the 177.5 puts, expiration date September 5. Considering holding until expiration, yeah, I mean, that's your hedging strategy, right? You bought 177 and then you have your puts as your protection strategy. I think we're going to find some support at 160. Not sure if we're going to go back to 177. It's a hot stock, plenty of demand from retail investors, so you could see buying again. But if we have a de-risking theme, and especially if NVIDIA bust next week, and by bust I say maybe disappointing results, not as high as folks anticipated, or you'll see money coming out of Palantir. Because these things are connected. In a lot of retail portfolios, you have margin accounts, and maybe they're long NVIDIA and they're using margin to buy Palantir, and that could be problematic in that case. So I think you're in a pretty good position right now. You have 177. You tried maybe to chase a little bit of a movement in Palantir. You have the 177.5. I will do exactly the same strategy that you got. Just keep it as it is. If it rebounds, trades above 177.5 by September, okay, good to go. If no, it's trading down, then at that point, you just exercise and you exit your shares. You say you are selling calls and buying them back on the way down. That's another good strategy. So, I mean, I think you have pretty good grasp on what's going on here. Let's see how it's going to react around 160. Meta did not work out from last week. Still holding, should have closed yesterday. Can you comment? Yeah, I mean, yesterday we could have turned it into a call credit spread. Now, can we reverse back up and get closer, like to 780? Yeah, that's going to bring it back. But remember, the idea was to get into a bullish trade for Meta with the least cost possible. So we saw the call credit spread for last week, used only $1, less than $1, really 90 cents or so to enter this trade, betting that Meta will break out. Meta decided to go the other way and close this gap first. Can it rebound higher? Again, we have 3 more days in the week. If it rebounds closer to 780, you're probably going to see the 800 having some value, and you can maybe squeeze in a profit at that point. But for me, I'm not too upset about it because the idea was to get a bullish exposure at Meta without overpaying. I mean, think about if you bought naked calls. You would have spent a lot of money, and now it would have been a big loss. But spending $1 using the strategy that we've done, I'm not upset about it. I think if we rebound, good. If I can squeeze anything out of 50 cents, 60 cents, I'll be happy. But let's see how it's going to react around this gap, because that's going to be support number 1. If we break 750, my hunch, even without looking at the options data, but if we break 750, my hunch is we're going to hit some sort of a gamma flip, and we'll begin to see more selling in Meta. So let's check on that here. Expiration date the 22nd. If we see here, so you got the gamma flip at 740. Let's see the put wall. Put wall has already been broken at 760. Now you have to look at this gamma exposure right here, and it can go all the way to 740. So you have your wall here, your put wall at 750 from the gamma exposure perspective, uh, it's going to be satisfied. But once you break 750, you're probably going to flush down to 740 because that's another big gamma exposure, even bigger than the 750. And you see it here in the put open interest. So right now, my expectations, we're probably going to dabble into support here. And if we can find a footing, it's probably going to reverse higher again. But boy, if you break 750, maybe you can make your money back by buying that 740 puts, but give it maybe a week or two more and use the same strategy. Maybe we sell this time around, put credit spread in the short term, and then finance a longer dated put debit spread. That's the idea. So we'll wait and see how it's going to react here. It looks to me that it's supposed to find some support at this point, really close to this level right here. Hey, Mav, what can we expect for PepsiCo this week and next? So if we look at PepsiCo, now this is not widely traded in the options market, so I don't expect that it's going to be an options kind of phenomenon, but we see a defensive formation today. We looked at McCormick, we looked at Conagra. So there's a little bit of demand for defensive plays. We talked about this cup and handle before. We broke above the boundaries of the handle, so that's bullish. And that means that we have to test some of the prior resistance. And here in PepsiCo, now I don't know this week or next week, but this is a pretty bullish pattern. And it's not really overbought by much. I mean, even in the daily, it can squeeze its way higher without a stop. So we could see 160. I have it at 159.63, but you could get to that number really fast. And right now, the patterns look pretty good in PepsiCo. Above the 50 weeks moving average. We haven't seen that since last year. You got to hold here. You got to continue to hold. I like it. Maybe you want to sell some covered calls. If you want to raise some cash, let's see if we can get away with some. If we do here, covered call at 155, not going to get you much. 30 cents, that's not worth it. If you go next week, not going to get you a lot. September. So again, this one you probably just want to hold. It's looking pretty good. Okay, Berkshire Hathaway, September 5th. 470 calls, thinking of converting those into shares. It's going to cost you a lot though, right? 470 a pop. We want to be careful with that. So right now, if you look at the daily chart, okay, we broke above the 50, we broke above the pattern. We're above 470. The financials did pretty good. United Health moved higher, so that's going to help Berkshire Hathaway a little bit. Here's what I would say. You have all the way September 5, so you don't have to make a decision right now. I would say keep it as it is. If you lose the 50 at any point, you want to exit because that's going to be a failure to break out. The 50 was not seen since May. So we got to keep that 50 moving average as support. You lose it, out of the trade. Now, comes September 5th, if we're above, if we're trading, let's say 490, 500, of course, it makes sense to exercise. But right now, you got time. Keep it as it is. You know where to cut loss or maybe to book some gain, which is the 50 days moving average. Small, you say Viking Therapeutics disappointing. I see the results are on par because Novo produced the same results. Eli Lilly did the same results. So, I mean, what do you expect from a pill? I think that people are expecting too much from a pill. A pill is not going to give you the same effect as an injection. So I think the expectations are just way, way too high for a pill that's going to be a magic pill. It just doesn't work that way. We'll see. Give it 3 days. If we begin to see that there's demand from the retail investors, for example, it begins to find a footing, does a bullish engulfing candle, then okay, I might buy it again. But at this point, we'll just leave it 3 days rule. EQT, 55 calls, September 19th, thoughts on holding or stop out. So 55 for EQT. 55, that's going to be a little bit too far, to be honest with you. And we have expiration date to the 19th, which is not bad, but here's what I would say. You're at the lower boundaries of the Bollinger Bands. If you break the low of this candle where we found support, so the low would be 49.40. If you break that, I would say yes, you have to exit because we haven't seen the lows yet. But if we maintain support here, 49.40, there is a possibility that we could break all the way to the 20 days moving average. Be honest with you, just my 2 cents here. I think that the 55 is a little bit too far, and you really need to be above the 20 days moving average, meaning above 52.5 really fast for the trade to become profitable. So I would think that a better trade, assuming that we keep this support, would be EQT. And this is probably what I'm going to do because I'm interested in buying the name again. It's going to be 50 closer to the money, and then maybe you want to sell the 55. In that way, you're spending about 220 and you're raising about 50 cents. And that trade has a better chance of working out rather than the 55 naked, which right now, the price as it is, it's 15%. Probably the price that you paid for, even less, probably 10 or 8% chance of profitability. So when it gets down to this kind of number, below 10, I would say it's in your interest just to exit the trade. But again, we'll give it a day or two. If the support right here is not violated, okay, there is a chance. But then the other side of the calculation here, let's say that we keep the support. What is the time horizon? I need to be above the 20, and I need to be above the 20 fast, meaning by the end of the week. If we're not above the 20 by the end of the week, out, even though we haven't broken the lower support that we found right here. Is it time to start getting long industrials? Well, which industrials? Because that sector is all over the place. You have the weapon manufacturers, you have some of these specialties, you have Caterpillar, Deere. Here's what I would say. There's a lot of consolidation in railroads, so if you want to pick here, who's going to buy who, I would say that's an okay place to speculate. Would not really chase any of the trucking or the delivery, FedEx, UPS, forget about it. Is there another place here to invest in industrials? Sure. The defensives like waste management, that gave you a pullback. And think about any company that can continue to do price gouging and get away with it. That could be in Caterpillar, could be in Deere to a certain extent, could be in some of these tool manufacturers like Fastenal could get away with it. But you have to think about it a little bit more. Think about who can get away with price gouging, the necessity of the product right now, that the consumer is not going to be as price sensitive. Think about that. And the other thing I would say is, of course, railroads, just because of the consolidation of the industry. And then you have the weapon manufacturers. Those are always going to be pretty good. But I would not buy the XLI, for example. I think it's just too much of a diversified sector to buy an ETF on it. Let's do Thermo Fisher still in the trade. It is up. Do we do management? We just talked about Thermo Fisher. So TMO right now is above the 200 days moving average. Let's clean up this chart for you so you can see it better. You're above the 200. It's a little bit too hot if you look, let's say, the hourly. So it is stalling a little bit, but I would say you're doing pretty good here. And you're only going to need to reconsider if we lose the 200. But right now, if you want to do something about it, let's say you have the 500 calls. Can you raise some cash if you sell a spread on it? Let's look here. If you have this September 19th, for example, you have the 500. You can sell the 530, you can sell the 520 and raise some cash. Even if you have the 5th, you're going to be able to raise some decent amount of cash, depending on the volume here. Not a lot of volume. So you're probably going to see it in the monthly more than the weekly. But the idea right now, if you bought naked calls, you're worried about a stall here, maybe a little bit of a pullback, retouching the 200. Best way you can deal with it is either to sell calendar spreads or diagonal spreads, or better yet, just do a debit spread, sell the 520 or the 530. If you have the monthly expiration, then that's it. That's what I would do. UNH. Not a fan. I think it got the pump, and now I see some sellers showing up. I'm just not a fan of the insurance companies right now. I think the investors, the billionaires, who knows what they're looking at here. I know in Warren Buffett's case, he looks at value. He's willing to wait If it's going to take 2 years, 3 years, he'll wait. Other investors might be more opportunistic, meaning they're going to buy it for a little bit here, flip a profit 10%, 20%, and then get the hell out. So I'm not optimistic here with UNH. It's finding resistance. It's probably going to flip back and head below 300 again. We will leave it alone. If you want an insurance company, why not Humana? Humana is the one that's working out, breaking out in the bullish pattern. We talked about this, the falling wedge, and if it breaks above 300, I think it's going to continue to recover. Maybe UNH pain is Humana's gain. So if you must play the health insurance companies, I would say go with Humana. The general outlook for FANG or the MAG 7, correction or sea change? A little bit of correction. I would not even call it that because it's just a tiny bit of a pullback that's happening in NVIDIA and the chips today that is adding a little bit of pressure on the SPYC. We're close to 640 now. And a lot of it is coming from NVIDIA. But if I look at Apple, not much. If I'm looking at Microsoft, give it a minute here. See Microsoft pulling back a little bit. I think it might have sort of a bear flag pattern, so it's retreating a little bit of gains. Meta obviously pulling back, Google pulling back. So it is sort of a de-risking. It's not even a correction. It's just de-risking. Things went way too high, too fast, and the managers right now are beginning to de-risk a little bit. They think, and again, I disagree, but this is what they're talking about. They control more money than I do, so they can move the market better than I do. But what they're thinking right now is the Federal Reserve is going to cut rates. And if the Federal Reserve is going to cut rates, then do you really need to be over-concentrated in the resiliency of FANG or the MAX 7 or whatever you want to call it? Because these companies have huge cash balances, and they do pretty good when we have interest rates staying higher and there's pressure against companies to perform. But if we have interest rates being cut, that opens the path for home builders, for the regional banks, for the small caps, and they want to rotate, the managers want to rotate to these sectors because they know that the over-concentration is a problem. Now, I disagree with this outlook because we don't know how the data is going to look like. Powell, for all you know, can be a little bit hawkish tomorrow in Jackson Hole. For all you know, the jobs number in September could be not as bad as we've seen before. The CPI might be hotter, even though we have manipulation of the data. So we have a lot of drama that's coming out, and you can't really make conclusions like this. So here's what I think. I think that the managers right now will play that game of, oh, yeah, we have a little bit of concentration in the big caps, and interest rates will go down, so why not de-risk, book profits, and rotate? But sooner than later, they're going to go back to the same habit again, which is, okay, no certainty in rate cuts. Let's buy the dip in the big caps. That's what they're going to do. They always do that kind of thing. They try to rotate out of the big caps. They come back right away. And that's not going to change until we see significant change in the macro picture. Anyhow, is the Tesla butterfly from Options Tracker last week still worth entering, or would you adjust the expiration date? If you're going to do it 325, it's still viable for this week. Honestly, the butterfly works out in really short-term expiration dates. It doesn't work out in longer expiration dates. So here, if we do the put, let's check on Tesla. And if we do 3, you might want to play with the strikes, though. So if we do 325, and then we sell the 315, and then we buy the 305, it's not the best chance of profitability right now. So you're going to have to play with it. So you have to do 330, maybe 320, 310, see if that's a little bit better. Maybe. How about if we make it tighter at 25 and then buy 20? That's going to be cheaper, but there's a chance it could break below 325 if Jackson Hole comes out ugly. So I would say for this week, the sweet spot you can do is 330, 320, 310. And that way, if Tesla drops all the way, let's see here, if we zoom out so we can see the RSI. If Tesla drops all the way to 320 fast, it might become oversold and you see a rebound by the end of the week. And maybe you can squeeze some gains. And we're leaving the gap at 10, not 5, so we can actually get away with some gains. I think this is the best one you can do right now. We could do it for the 22nd, of course. That's why it costs a little bit more. You don't want to go far. So if you go to the 19th, you're going to see the chance of profit drops to 16. Go to the 22nd, it's about 30, which is still decent. It's going to cost you a little bit more, though. So I would be okay if you want to go to 327. 325 will be a little bit too tight. Yeah, it's still a good chance of profitability if you don't want to spend the 200 plus. If you want to spend the 325, 315, 35, it could be, but just keep your expectations low, meaning don't overinvest, because there is a good chance it could play out, but Tesla could get oversold. If it goes to 320, then maybe by the end of the week it catches a rebound like this. So it goes to 320, RSI becomes oversold, then we get a rebound Friday, and now we dabble with the strike price that you got here, and maybe you're not going to be able to squeeze enough profits to cover your cost. Okay, so just keep that in mind. Last one. Difficult decision. Commodities up around 80%, and my gut says take it off the table until October. Too many different stocks to hedge. But in the long term, I think the cycle has just started. Yes, in the long term, I think that commodities is the next bubble because of the devaluation of the dollar. In the short run, though, there is a lot of risk because the market right now is anticipating rate cuts, and it's kind of delusional, to be honest with you, to expect 3 rate cuts. That could be a shock element. If Jackson Hole comes out and they say, look, we got to wait and see. We're not even talking about 1 rate cut right now. J. Powell could be stubborn. And if he does that, you're going to see the dollar popping higher. All commodities will go down. So I would say right now as an investor, you want to lock your gains always. When you have gains in any stock or any asset that you're holding, and let's say you went over 10% worth of gains fast, you got to hedge against that. You can do that in many ways. You can do book profits, reduce redundancy in the portfolio, number 2. Or number 3, you can buy some puts. So I would not blame you if you want to book some profits, stay in the sidelines, then come back later on, because we have a little bit of risk. September or October, we have that risk of, hey, we might not get the rate cuts, and the policy of the Fed might be tighter, especially if those inflation numbers come out higher, the CPI, PPI. Look, I said before, a lot of folks are expecting rate cuts. I'm expecting rate hikes, to be realistic with you. And if we get to that point, yeah, that's going to be a big sea change. Let's talk about Mosaic. Is it time to start adding MOS again? I need to see it above 33. There's still a lot of risk here that it could be a bear flag pattern that breaks to the downside. So I need to see it closing above 33 before I begin to add. Now, if you're worried about it, I would say set a stop loss at 30. You don't even need to buy the put options at this point because they don't have any earnings risk. So a simple stop loss would do the job at 30. That way it trades below 30, okay, we're out. If we trade above 33, then we could talk about, okay, buying to close the gap and recovery and all of that. But right now, let's wait a little bit more. Okay, if Trump wins a deal on Ukraine-Russia, what do you think of gold in that situation and oil? Well, oil is going to be tricky because the details would matter. If we have a deal between Russia and Ukraine, would we allow Russian oil to be traded in the market? If that is the case, then Russian oil is going to be expensive, not going to be as cheap. So it could actually push oil prices higher because now you look at the WTI, you look at the Brent, and maybe the price difference is not too much, and might as well just go with WTI or Brent and push oil prices higher. So I would say that it could be counterintuitive to what most people think when it comes to crude oil. Now, when it comes to gold, it might impact gold negatively because gold been the hedge against the geopolitical fears and all of that. So you might see a move to the downside. I would say that wheat will be impacted more. I would say that nat gas will be impacted more. And guess what? Hold on a second here. Okay, we're back. What I was saying is the number one sector that's going to be impacted by a Russia-Ukraine deal, if it happens, big if, would be the defense contractors. Because right now we have a bid for these defense contractors. They're going to see spending increasing in the next few years. I think that the theory is still intact, but you will see a big sell-off in the defense contractors. Not to mention, of course, the European defense contractors. Those names have been hot, hot, hot. And if we have a Russia-Ukraine deal, the biggest move, not going to happen in oil, not going to happen in wheat, not going to happen in palladium or nat gas. The biggest move will happen in European defense. We're going to see some of the German defense manufacturers flushing down, profit taking. So that would be the opportunity for a trade. Problem is, can we really predict the details of a peace deal or the timing? It seems that Trump wants it, and he's adding a little bit of pressure, but there's only little that he can do in that regard, to be honest with you. Okay, let's do small. We answered this question. Is it time to get slowly into long industrials? My answer is which industrial? Because it is a diversified sector. I suggested the defensives, the waste management stuff, that's okay. The railroads are okay because of consolidation. And the defense contractors are okay, but again, there's that risk of the Russia-Ukraine deal. Then the rest, you have to be selective. The rest of these names in industrials, you need to think about, okay, which company can get away with price gouging using the tariff as an excuse. A lot of them will do that. So you have to think about that for a little bit. And I think a company like Caterpillar can get away with it, at least for a while. I think a lot of these companies in tools, for example, can get away with it. If you see demand for housing because mortgage rates go down, you might see some of these names right here, Carrier, OC, getting away with it. But I want you to also think about the building stuff in materials. It's not really industrials, but here, VMC and MLM. These two could perform a lot better than the industrials because they have a lot of government spending, which is more intact than private sector spending. And if you look at the individual industrials. So I hope that answers your question. CZ, hey, have marijuana stocks. You have a large position in VFF. Village Farms International, look, declassifying will be pretty good for these names, but here we want to book some profits, right? Because it went a little bit too hot. Just look at the recent pop here. You went up by about 70% really fast. Best you can do right now in the short run is probably consolidation. So why not book some profits? You can't do covered calls, really. I don't think we're going to have any volume in the options market here. So this is just sell, book your profits. If it dips down and then it finds support at a point of a higher low and we begin to break the previous highs, you enter again. And I think it's going to be a good bet given that the government right now is a little bit loose in easing the restrictions against marijuana. It's a good investment, but it's time to book profits too. It's went a little bit too hot. So let's see who we got here in Discord. Good morning, Mav. Wanted to ask you about USAR and MGNI. Okay, so USAR, as I said, you probably want to do a combination of buying a put, a protection put of 14, and then you want to sell the 12 or the 11th, because that's going to be the point where you want to re-enter the trade if it goes down that way to begin with. It's going to reduce your entry cost for the insurance policy. But right now, we'll keep it as it is. MGNI performed pretty good. I wish I kept the stock in the portfolio, but now we got a lot of warning signs, folks. I don't think it's going to continue to perform this way. I think it's going to begin to pull back. I would give it the benefit of the doubt, though. I would not sell if you long MGNI. I would not sell until we take the last support that we got right here. And the low was 2072. Set your stop loss, if stop loss meaning stop gain in this case. If we hit to that number, okay, we're out because that's going to be the top. Right now, there's a possibility that it could be a bull flag pattern or break to the upside. So hold, but set a stop order. We're not going to call it stop loss because you're probably up. We'll call it stop order in that case. Okay, Fortitude, you're showing me the 640 wall. I see the same thing in my data, so I'm with you here. That 640-ish, which we kind of hit here, is probably the floor. If we break 640, then we're going to talk about an inverse gamma squeeze. But I think right now we hit all of the walls, all of the boundaries of the day. My expectation is that we just continue to go back and forth within the range that we talked about. But if we look here, the 19th is today. We're now beyond the gamma flip, so 640 was already revisited. That's the gamma target, right at 640. Now, if we break 640, we go back to 640 and break it again, then it's going to get interesting because we can talk about the call interest here at 634 or 35, which will make our 640, 635, the trade that we've done yesterday, a done deal. Hopefully, we'll see. But right now, my expectations are that without demand, and demand, by the way, means you go to the volume right here. And you got to check on the volume of the puts. You got to see some volume showing up. Let's go to the appropriate date here, the 19th. And you see demand at 643.42. Maybe it's beginning to build, but we need to see a little bit more in the puts here. We need to see 640, 641 building up. What I see right now is they're closing the 640. They're booking profits from that, the day traders. We need them to open more. If they do, yeah, we're going to flush down below 640 and maybe get to 635 by today. But keep your expectations low. We need to break 640 first. Update, George, updating this SPY. Yes. So that's your update right here. I think we found the low of the day. Now, if we begin to revisit that low, then understand that the market maker is seeing options volume for the puts for the 640 increasing. And in that case, the market maker is going to begin to freak out about this contract to see the high open interest right here. And it might cause a gamma flush. We haven't seen that since April, by the way, so we'll keep our expectations low. But if it happens, it'll be an interesting day. Let's see who we got on Patreon. Holding shares in VKTX. Hold 3 days or cut it. That's a painful one because could it recover? I would say I need to see some retail investors excited about it because they could do some sort of a short squeeze, especially if we have recent shorts entering the name. I would say right now, if you, let's say you bought it here at 33 and now you're down all the way here, I mean, the damage is already done. So there's no point for you to cut. I would say keep an eye on the lows of the day, 23, 21. If we begin to lose those lows, then it's a falling knife. We haven't found the low yet. At that point, you might want to reconsider exiting altogether and then thinking about it later on, after 3 days. Can we find some support in VTX? If we do find some support within 3 days, it is oversold right now. If we find some support, we see green candles. We're trading above this candle right here, 26.25. Okay, then we got a bottom. And at that point, we can buy shares again. And if you're still holding the shares, it's going to average down, of course, when you buy here. And your break even will be much closer than what you bought it for. So that's the strategy to exit a messy situation if you have the shares in Vikings. Keep an eye on the lows. Too early today to make a decision right now. At the end of the day, if we're above the lows, it's a good sign that, okay, give it 3 days and then think about averaging down and lowering your average of entry here to get out of break even at some point. Let's go back to Apple here. So the SPY still holding. You guys know what to do if we begin to trade back to the lows. 640 is probably going to be gone. And we're going to talk about 635. But to be honest with you, I'll be on the safe side and do the 635. If we're going to do that naked, do it for tomorrow's expiration, not today. The trade for today would be the 640, 635 if you're still interested in that. But you got to make sure that we're failing somehow. We're failing before this candle right here. The high of this candle is 642.30. So any failure candle, reversal candle before that number, I would say the possibility is we're going to revisit the lows, break below the lows, and then you can play with the 640, 635. The expiration date of Friday is the ideal one. That's why I picked the weekly. It doesn't cost much. Let's check on here. SPY, the 22nd, we're not doing a butterfly. 640 and 35, 128. So cost a buck yesterday. It's up about 25% or so. It's not a bad price. If you go down to 635 by the end of the week, you're flipping a pretty nice profit here. So the trade is still valid. But you have Apple here popping a little bit. NVIDIA is the weaker element of today. Tesla below the important number. We'll keep an eye on it. If it closes below, let's stick with the butterfly and then expand later on. But folks, that's the dynamic of the session today. Nothing really interesting, super interesting, but now you know at least a little bit of what to do if we have that inverse gamma flip at 640, if it happens today. With that, going to be back again in the Discord chat session in about an hour or so. So any update, we'll cover it at that point. Anyways, folks, let's wrap it up right here. Hope everybody had a great weekend. And thank you for joining us in this session right here. Good luck with the rest of the day. Take care.